I received many requests to give a version in English of my interview in Arabic today on Arabia regarding the market. So here I am without the red tie. And first, I'd like to say that this is my personal opinion, which I'm expressing. It's not Awad Capital official view. And this is not investment advice. It's for discussion purposes. So if you have any comments or ideas, please share them in the comment, and so everybody can participate in the discussion. The question today is, why is the market selling off so much the last few days and so aggressively? And is this sell-off overdone? Well, we've had a perfect storm of a couple of bad economic numbers in the US, particularly another increase in the unemployment rate on Friday. And all of a sudden, instead of the market being excited like it was on Wednesday about the Fed cutting rates, the market is now terrified about the prospect of a recession. In addition to that, we had a very strong move by the Japanese yen, which resulted in the Japanese stock market selling off by a historical measure, actually the strongest sell-off since 1987. Plus, we've also had a big change in the expectations on the US elections from a sort of a pure certainty of Donald Trump winning to now Kamala Harris being neck to neck against Trump. And this also has a big impact on the bond markets and the stock market. So over the last 3 sessions, we've seen a very massive sell-off in global equity markets and a very strong rally in bond markets. Do I think this is overdone? It probably is overdone. Some indices are now down on the year, like the Russell 2000 or the CAC 40 in France, for example, and this doesn't tally very well with the economic numbers as we see them fundamentally in the US. The second question is a recession coming? And I mentioned that Goldman Sachs research changed their probability for a recession in the US next year from 15% to 25%. This is a very small move. If you look at the GDP growth, it's still at a decent positive number. Unemployment, yes, it's gone up from 4.1 to 4.3%, but that's still historically a very low unemployment number. And inflation at around 2.5% is also low and at a level where the Fed has told us already that they're comfortable cutting rates. Actually, the best news is that the rates are so high at 5.25%. It's a very historically high level. The Fed actually has a lot of room to cut rates. The inventor of the SAM rule herself said that while this rule in the past has been used as a sign that a recession has happened, we should not be jumping to conclusions that there is a recession. And the main reason for that is that the unemployment, the absolute level of unemployment is actually very low at 4.3%. There could be, and this unemployment number is very volatile. And if we see another number in August, which could be the reverse of this sprint, we could see the markets rallying a lot after that as well. The last question I got was, will the Fed cut rates in between meetings? I think this is extremely unlikely. It's actually priced in the Fed futures market. But traders or investors who are betting on a cut in the coming weeks before the September meeting, I think are not listening to the data. They're not listening to the Fed. The Fed always says that they look at the totality of the data. They don't look at a single number to take a decision. And as of 3 days ago, when the Fed chairman spoke on Wednesday, he said that the idea of a 50 basis point cut did not even cross their mind. And that's a 50 basis point cut in September. So I think that's probably the best we will get, a 50 basis point cut in September. I think a maximum of 75 basis points between now and the end of the year, much less than what is priced in the market. Obviously, we need to continue to be watchful for the data, but let's remember it's August. Markets are very illiquid. Most people are hopefully enjoying a holiday, and that's why there is illiquidity in the market and some very sharp moves. So stay careful out there, and if you're on the beach, enjoy your holidays.